Ladies and gentlemen, fellow traders, don't struggle anymore. Join us for the live shows. Hope you're all well. Hope you're all here. Hope you're all keeping well. I'm starting a few minutes early as usual. I do that every week. It's one of those things that I do. Don't forget, guys, trading is risky. If you don't like risk, you probably shouldn't be trading. You need to know that. It's important, really important. I hope you guys are all making loads of money. I hope you guys have all done well. This morning I did mention that gold might be a good trade to the upside. Once it reaches these levels, I'm waiting for it to come down a bit and sort of do a bit of a retest, and then we'll get a nice long trade out of gold. Gold is looking interesting, but what you might be interested in is what happened to my Australian dollar, United States dollar trade. What happened there and what went down? Well, effectively, I moved the stop loss up about 400 times. Yesterday, I moved it right. Our take profit was at 650, and I moved the take profit up to around 600. And while I was sleeping, it came back and took that out, which is fine. I'm not unhappy about that. I had moved the take profit away up to 770, away up in the 700s, just in case it popped up. But it popped down, and it took the stop loss, which was in profit. And that's exactly what you need to do, because when it takes your profit out at that level, you're not upset in any way, shape, or form, because that was effectively where you wanted your profit. It's $50 less than my target, so it's great. And it's a fine profit. So that's how you take your profits. You just move the stop loss up behind, and it works out either way. It either carries on going and it makes you more profit, or it comes back and it takes your profit out where you wanted it anyway. So that trade is now done and over, and actually it makes you feel a lot better when you see these long red candles going down, which is way beyond what any profit was, and it seems to have turned around. So it looks like it's going to come back up, maybe do a retest on that, and then fall on down again. So that's done. That trade is now over. So what's actually happening with our Brent crude oil trade? Our Brent crude oil trade is most likely following the gold, because gold, as I said, we're looking for a long trade here, a nice long trade coming up off of this trend support, bouncing to the upside. That'll be nice. So what we're looking for on Brent crude oil is for it to continue on and break through this green level here. Breaking through that resistance would be great, because then we get a breakout trade and goes on to the upside and starts making us loads and loads and loads of money again. That's what we're waiting for. That's what we're hoping for. United States dollar, South African rand trade. How's it, David? Good to see you again. Our United States dollar, South African rand trade is now breaking to the upside, which is a bit of a moment, sort of like, yay. But there is a bit of a red candle here, but at least it's broken to the upside. It's gone above this trend resistance, and it's sort of hitting that level. There is a resistance level here that it's hitting as well. Like to see it bypass that and continue on up, but at least it's looking a bit more in our favor than it was this morning. So what can you guys tell me? Hi Shane, how's it going? Sir Lunch-a-Lot, we haven't seen you for a while. We've been waiting for our lunch for weeks. Good to have you back. Good to see you back on the show. Lekker, man. Always good, always good. Bitcoin, an interesting one. Bitcoin has been in a bearish mode, and it started to go back up. And a lot of you might have got excited when it started to go back up here. And what you have to be careful of, and where's Brewman today? What you have to be careful of, this is bearish. There is a trend resistance going to the downside. So you would have looked at that and thought, no, it's breaking through the trend resistance. But there's a heavy main support that it actually broke through, giving a breakout trade. What it's actually doing, it's gone back up to retest. Good chance it's going to fall down from here again. So keep your eye on that one. Don't be going long or short on it at the moment. I'll go long if it breaks above that main support, which is now a resistance. If it breaks above that, and I'll go short if you get a red candle coming to the downside here. That'll look like a decent short trade. Very similar on the DAX, by the way. The DAX was an interesting one where it actually came back up, hit this trend resistance. Look at the size of that candle. Nasty candle, that big long one down. Broke through that support level. And you can see once it broke through that support level, it said, thank you very much. I'm heading down to the lower level. So it looks like this one's going to go short now. I think everyone's getting a little bit iffy in the markets, because if you look at the S&P 500, similar situations broken through here. The news is not helping matters, and everybody's getting a little bit worried about what's happening in the market. Big job figures news coming out as well. There's a lot going on in the news. If you have a look at the news, you'll see that I'm hoping I can pick up the news here. Yep, there we go. Let's go and have a look. If you look at the news, US stocks waver as September starts with trade Fed drama in focus. Wall Street prepping for a tense opening to September trading due to tariff legal issues and concerns over the Fed's integrity. And there's also a lot of jobs figures coming out. So I'm just going to reload this and just see what they're saying now. If there's anything new. And if you're short on the DAX, Sir Lunch-a-Lot, you're going to be buying lunch today because you're going to make some money, I'm pretty sure. Trump says India trade relationship is a disaster. Well, that's not working out too well. Trump may declare a national housing emergency. Tesla falls short. Russia and China sign major deal for new gas pipeline. Russia and China, buddies. Gold is jumping. So there's a lot going on. You see here, oil drifts higher with focus on OPEC and the US policy on Russia. World shares slip and gold sets a fresh record high. There's a lot of interesting news here. So keep your eye on this. There's a Fed drama in focus. There's a lot going on with these tariffs again. The tariffs are back in the spotlight. They're out there to get you guys. They're out there to get you again. So yeah, let's stick to what we see when we're trading. Trade what you see. So maybe the oil price will go back up again. That'll make us some money. The gold price is going up. Safe haven trade. And the S&P 500 and the DAX are going short. The DAX does look very short to me here. It looks like it wants to go down. I think we're getting a short trade on the DAX. I don't know if I should take a short trade on the DAX for us here. You know, we're busy with a live show. I'll concentrate on it a wee bit later. Let's have a look. United States dollar, Canadian dollar. What's happening here? This one is taking a longer view. There is a red candle here, so it's coming back down. That's actually quite interesting. I thought it might continue on to the upside. There is a lot going on in the markets. Shane's getting his normal ads. And if Shane didn't get his ads on this show, I'd be shocked and stunned because, you know, that's important that Shane gets his ads, because without the ads, there is no Shane. I mean, Shane comes to watch the ads. Okay, so I wonder if anyone's going to come and actually watch the show today. There's only a few of you here. Is a bit, maybe it's the ads. It's chasing everyone away. The ads are sending you all out there, you know, giving you a hard time. But let's see what we get. Let's see how we go. Don't stress when you're trading. Swing trade. Take it relaxed. Don't have to watch the charts all day. I hope I'm getting paid for it, Shane. Yeah, no. Obviously, YouTube takes the money there, the bulk of the money. They make all the bucks there, eh? That's why they're a multi-billion-dollar company. Yeah, absolutely. And then as YouTubers get a wee portion, sometimes, not always. Great. Bitcoin. Yeah, Bitcoin was an interesting one, I must say. Bitcoin, what are you doing, Bitcoin? You know, everybody was all excited about crypto, and then it's hit this level. It's come down, and now it's going into this retest. It looks like it wants to go down. I think crypto is going to drop. Looks like they're heading to hit crypto as hard as they can. Good morning, Ramford. Good to see you again. Absolutely brilliant. DAX is in your golden zone. Elaine, how's it? Great. And Henny, hey Henny, good to have you on board. Good to see you again. Tell me, Shane, when you say the DAX is in your golden zone, do you mean it's in your golden zone for a short or for a long trade? Because I'm looking at this and saying the DAX looks very short to me at the moment, and it looks like it wants to continue. It's broken to the downside. It's broken through this level. Worst case scenario is you're going to get it to go back up and give a bit of a retest and then carry on down. You might actually get a retest here. It might actually go back up, retest, and then send its way down again. Target, probably 23.4 to 23.2, eh? With a stop loss 24.1. Yeah, looks like a reasonable short trade, the DAX. A bounce. Okay, yeah, okay, Shane. So that's what I'm thinking, a bounce, in the sense that you might get the bounce, yeah, up to a retest and then down. Maybe I should just, do I have fib here? Yeah, I do actually. Look here. Let me just see what fib looks like. Yeah, you know, that said, is it breaking through the golden zone, Shane? Is it breaking through there? Just looking at this, let me draw that so that it stays. If you look at that, there's your golden zone there. It seems to be going into the next zone. It seems to be breaking to the downside. It seems to be heavily breaking to the downside, which means it could come all the way down. Looks quite rough. Rough, man, rough. Oh, I don't know. If the DAX is going down, everything's going down, by the way. So it's probably, everything's going to probably follow suit. So you can have a look at the S&P 500, and you're probably going to get a similar situation here. But the S&P 500 is bouncing, going back up to retest. So is it going to stay there? Is it going to go down? Interesting, interesting. Gold is definitely on the up. Oil is definitely on the up. Yeah, so our Australian dollar, United States dollar paid off. That's great. That seems to be heading to the downside again. That one is going to the downside and heading back down. Luckily, we moved our stop loss all the way up behind it, and we basically made target. So that's absolutely fantastic. I actually moved the take profit way up and into the 700s. It was at 650. We made about 600 odd because it effectively came back, took it out, and there we go. That's not bad on this one. And then on my, I'm very happy about the main account because I had that trade there as well. And I moved the stop loss the same way, also taken out. So that's fantastic. Nothing wrong with that. So that's a good week, all in all. I mean, if I don't take another trade this week, I'm happy. It's all good. paid well. So that's good. All right. So I'm not talking about this account now. I'm talking about, you know, the real main cash. Okay, so what are we going to do about the United States dollar, South African rand? That one, it does actually also need to just go above this level here. Just needs to break above that level there, just to give us a little bit of happiness there. A little bit of happiness. Blue Mango, how's it? Welcome back. Good to see you as well. Also here. I see everybody's climbing on board. Everyone's coming back, and that's always good to see. It's great to have you guys together. Got a nice little community here where we can chat and talk and talk about the things that we need to talk about and we need to get ahead on. And as I always say, no need to stress, no need to sit and watch the charts all day. Just relax, take your position, let it play out, see what happens. How long have I had Brent crude oil on the go, guys? A long time. I just left it. I haven't been bothering about it. Look at it. It just keeps on going up, and it's non-stop moving to the upside. So can't complain about that. No complaints whatsoever. Let's see. Yeah, jeez, that's only just checking my messages there. Got loads of those as well. Might be one of you guys. Right, okay. So, I wonder if we should take this DAX trade to the short side. Who right now would take this DAX trade to the short side right now? How's the risk to reward? Risk to reward doesn't look bad, but I am a little bit in the thought of it needs to just go back a little bit. Maybe give us a retest. So I think I'm going to be patient. And wait for it to go back a bit and give us a retest, because there is a bit of news this afternoon that's probably going to affect it one way or the other. Let's see with that one. I don't know if we should actually take that right now. I think maybe it'll be a good idea. It just goes back and retests, but it doesn't look like it wants to. It looks like it wants to just fall straight down, something like that, which is obviously a thought and a concern. Let's just go up a couple of time frames. Let's go up to the weekly time frame. What have we got on the weekly time frame? That looks very, very short on the weekly time frame. Don't you guys think? That looks insanely short on the weekly time frame. And then if we go to the daily time frame, it looks very short as well. I can't say there's much here that's saying to me, ooh, go long on the DAX at all. Most of it's saying short. So I got to look at the whole picture and think to myself, that actually does look pretty short. I'll be taking a big gamble if I do it, but it does look pretty good. Does look pretty good. Why am I thinking about it? Something's bothering me. I don't know what it is, but it looks good. It looks solid. It looks solid. Yeah, that's a good idea, Shane. Let's wait and just see what this candle does. Out of interest, you got a good point. Let's be patient. Like I said just now, let's be patient and just see if it does close this way or if it gives a retest or what it does. Because the first candle is still between the both worlds, and this candle is still going to be open for quite a while. So I think we'll keep an eye on it and we'll just see which world it takes, which way it goes. I'm not convinced. I would be. I look at it and I think gut feel says that's short, but gut feel also tells me it just gets I just get a feeling there might be some kind of retest there. And the one thing that will inspire me on that is if I look at the S&P 500, bit of a retest going on there. Let's have a look at France. What's France doing? That's pretty bearish. UK has also broken through a level, and it looks like it's retesting. So they all seem to be losing steam, probably as a result of the news that's on the go at the moment. What will make you trade here right now is a bit of FOMO, because you don't want to miss out. You don't want to miss out, because if this candle ends down here, you're going to feel like you missed out a lot. So I would rather the candle closes somewhere around this area. I would rather it actually goes back up a bit and then comes down. But let's just see. Let's have a look and see what it does, because you never know. You actually never know. And then today's trade was actually, I'm waiting for the gold as well. Patiently waiting for the gold just to come back a little bit, touch off here, and then go. That looks like a reasonable trade as well. But while I'm waiting for that, I'm actually hoping for Brent crude oil to break to the upside and go. So, yeah, there's a little bit of all the worlds going on here, isn't there? Okay. Yeah, I think what we'll do, Shane, on the DAX, we'll wait. I think we'll wait. We'll be patient. I think we'll wait. I'm going to give it a little time. I'm not just going to jump into that one. I think what we'll do is we'll wait on it. Let's see if it does close into the red, and let's see if it decides to go back and retest. Let's see what it does. But look, bearish on all fronts. Weekly, daily, 4 hour. Looks like bearish is the road to go on the DAX at the moment. That said, I don't think it's going to go far. It's probably just going to go down here to the 23.2 or maybe the 23,000. There's your level. Your level's actually at 23.3. So I don't think it's going much further than that. Yes, that's what I'm waiting for on gold. I'm waiting for gold. Well, 34.10 is pushing it a bit. There's a main resistance here that, while it was a resistance, it's obviously now a support, but it was a resistance, and this was done on a daily level. On basically, if I make this smaller, you can see this is the range that it's been trading in. So it's been trading in this range, and every time it hits this level at 34.40, 34.40 to 34.50, 34.40, that's 1, 2, 3 times. The fourth time it managed to break through. But this is a serious level. So the reason I'm calling 34.40 is because that's a daily level. That's a very, very, very strong level. 34.10, if it breaks through this level, then 34.10 is a 4 hour level that it broke through. So it broke through the 4 hour level, went back, retested it, shot up, then it broke through a daily level. If it breaks back down through this daily level, I don't know if this 4 hour level will hold, but it's a good level to look at if it breaks through that level. My doubt is that it'll break through that level. And the reason I doubt that it's going to break through that level is this. I've drawn this very short-term trend support in. But if you look at where that trend support is, it's right on that level over there. And there's a good chance that both of these levels are hit at the same time. And if it hits both of these levels at the same time, I'm thinking that's a pretty strong support. That said, I mean, if you were to do something like Shane and draw a fib in here, you're probably going to find your fib somewhere down here at this level. So both levels are relevant, are relevant, but what you got to do is look at the picture in an overall. So if you look at it in a bigger picture, you're saying, here's your main level here. If we get a strong green candle coming out of this level or off this level with that resistance, then we've got a bullish trade. But if it breaks through here, then the next level is your 3410 level, which would be the next level down. And then what remains to be seen there is if it does bounce off that, will it be able to push through that main level again? Because what you can see here is in the past, it broke through the main level, but then it fell down like a sack of potatoes. I mean, it really did fall down from there, break back through and shoot all the way down. That could happen again. Look at that. That's very close to a double top. It's not quite a double top, but it's very close to a double top on top there, which is tricky because it's hit a level where you could say that's a double top. There's your main resistance, and there's another 4-hour, well, there's your main support now, and there's another 4-hour support there, which was resistance that it broke through. I'm leaving the picture like this because that is still support. That is still support. This is still referred to as what was a resistance, and is now support. I don't want to confuse you guys too much, but you've got to look at the bigger picture of how it works. So on gold, I'm waiting to see where it gets to patiently, because that could be a double top. So I'm waiting to see, does it get to here and go up, or does it break further and go to here, go up, or does it just collapse all the way down to 3,300? Because some kind of news this afternoon says, oh, but the iceberg moved slightly 5 degrees to the left and we need some cake, so we got to send gold down to the earth and whatever. Yeah, you know what I mean. You never know what's going to be said or what's going to happen in the markets. So yeah, that just for that sort of scenario, you've got to look at that picture as well. It refers to Brent crude oil as well, so I'm hoping that it does go up, because obviously I am in the Brent crude oil picture, and I obviously want the Brent crude oil picture. That's how long I've had it. I just want to make this a bit smaller so you can see the chart better. I want this to break through that prior high and break to the upside, giving me the breakout to the upside. If oil goes up and goes flying up, and it's exactly as I predicted, and you can see my target's quite decent at the top there. So I'm hoping that Brent crude oil doesn't want to come back down and relax as well. That's looking good for now, looking reasonable, and I don't see too big an issue there. Okay. Yeah, you see the 3410, Shane says the 3410 is roughly on an order block area and corresponds with a 50%, which makes it a golden area, which makes it a reasonably good call of 3410. So my level is in there, but you can't ignore your daily level, because your daily levels are strong. Your daily levels are incredibly strong. So you've got to leave them in there and keep an eye on it. So I'm not going to trade anything until I see a strong green candle bounce out of there, because you've got so much strength here. Like I say to you guys, as trading is 50-50, you know that there's no guarantee from a chart. A chart can't really predict the future, neither can you. But what it can do is give you a picture to trade off of. But everybody's picture might be slightly different to the rest. But if you're trading with price action, you can clearly see these levels. But these levels are not just levels that you trade off because they're a line. They're human beings that are trading in the market, that are going to be like-minded human beings that are thinking along the same lines, that have got their orders in there or planning to trade off of that level. So when it gets to that level, you've got to consider that that level might work out, but you don't want to trade it while it's still going down. Like they say in the market, don't catch a falling knife. You're only going to slice your hands. Don't do that. Don't try and catch a falling knife. But what you can do is, if you get the big green candle bouncing and going out, then you've got a lot of confluence saying it's bouncing out of that, off of that level and off of the trend level, so it's going with the trend. But if it breaks through that, then it's a breakout. It's breakdown, not a breakout, a breakdown. And it's breaking down to the next level, which is the 3410 level. And the 3410 level, you can see I've got it clearly drawn in here. That was a level on the 4-hour, which it broke above. And now we know it's also a golden zone level. So it's got a lot of confluence as well. It gets down to that level, strong level. But also, you got to wait for that green strength coming out of it before you can take a long. You've got to wait for that candle that closes and says, we can go long now, let's go. Because if it goes red and it breaks through, breaks down, if it breaks down from that level, look at where you're going. You're going 33.3, then 33 and 32. That's quite a big fall. That's a drop. And look what happened in the past. Straight down, all the way. Big long drop from those highs. So that's not to say that it can't happen again. So that's why we watch all of these levels carefully. Try and stay within those levels. Don't preempt anything. Don't try and preempt it. That's why we're looking at a trade on the DAX, for example. And Shane and I were discussing it now, in the sense that be patient. Fear of missing out. Don't jump the gun. You know, this looks like a great short trade. If you sit here and look at it and you say, well, that looks like a great short trade. But it's very easy for me to do a rerun on something like this, knowing where the trade's going to go in the future, and say, well, that's a short trade, take the short, you know, because I know it's going to go short. But nobody knows what's going to happen next here. Nobody knows. Could be the same as that, or it could turn around and do that. You don't know. So what you want to do here is just play it by ear. If that closes as a red candle, then you know you've got a short. If it goes back up and retests, then you know what's next and how to play it. You've got to be patient. You've got to be calm. Don't stress. Relax. Position your trades. Let your trades play out. Let your trades do the work for you. Don't try and work your trades. Let the trades do the work for you. Just plan your trades. Not every trade's going to be a winning trade. Everybody loses in the market. You know, the amazing thing is when I tell a new trader or a young trader or a trader that's just come off of a course, hey, listen, dude, you have to realize that you're going to lose half your trades. In fact, no, more than half your trades. No one will believe me. Everyone will tell me I'm crazy. I get it. Nobody wants to believe that. Nobody wants to believe that they're going to lose trades. Because that's not what we're here to do. We're here to win. We're all here to win. Psychologically, we're all here to win. And it is possible to win more than you lose if you don't have a proper plan. And if you just take trades with small profits, yes, you can do that. You can make more wins, because then it'll all be small profits, and then you'll have one or two big losses. What it is you're looking for those one or two big wins and lots of little losses. That's what you're looking for in the market. Are you bullish on BTC? I'll have a look now, Blue Mango. My 4-hour DAX candle has another 35 minutes before it closes. If it closes below my level, then goes short. My 4-hour is the same. Okay, what's the 4-hour on this one look like? Let me just see. Am I getting any information? This chart's kind of useless. Okay, don't worry about it. Have a look at my other charts. Thanks, Rob. I have a 34% win rate, but I'm fine. But just the point, Sir Lunchlow, which I've said over and over and over again, that, I mean, my win rate, I know my win rate is probably less than 50%. I don't mind. I don't calculate it much. I know that it's not like a 70% win rate or anything like that. And win rates don't make you money, because I don't really care about them, because over the period of 12 months, I normally win one or two massive trades and quite a few medium to higher percentage amounts. So in other words, decent wins or full profits, or whatever the case, a number of those. And in between that, there'll be a whole load of small wins and small losses, because those small wins are the ones that got taken out by stop loss or whatever the case in profit. They got taken out earlier, whatever the case. And all the small losses, which will either taken out on the full loss or less than the full loss, because I decided to get out of the trades. So there'll be a whole lot of small ones like that. But during the course of the year, there'll be a number of target to higher wins, and there'll be a number of huge wins, small number of huge wins, and those are the ones that carry you through the year. You don't need a big win rate. You just need a couple of big wins. That's all you need. Then Blue Mango asked, are you bullish on BTC? And my feeling on BTC at the moment is bearish. And I'll tell you why. And it's not because of the news, because there's a lot going on in the news. Number one, I don't clearly understand crypto as well as I should when it comes to the news. So fundamentally, I'm not very good when it comes to crypto. So if I tell you something on crypto, it's not coming from a good fundamental base. Crypto is not my thing. And also, while I'll trade it, I won't invest in it because I am a firm believer in it, as you know, as it being fresh air. But it's a tradable product. And I can apply my technical skills to trading crypto. And if I look at this crypto, and I know there is something going on in the background, there's rumbling going on with crypto. What it means, that's something else. Maybe someone else can tell me. But what I'm looking at here from a technical perspective is it broke through the support. It's broken down. It's broken down, it's gone back up, and it's retesting. Not only is it retesting what was the support and is now resistance, it's also retesting the trend resistance. And that is tricky. So both of them are being retested. So it's gone back up here to retest. So the only way you can call Bitcoin at the moment is if you get a green candle that breaks upwards and closes above that. Or if you get a red candle that breaks down and closes below this level, then you know it's going short all the way back down to 98, perhaps somewhere down there from 110. So back down to 100 again. So there might be a bit of a drop down back down to this lower level here at the 98 to 100 level, somewhere down here. It does look very possible. So no, at the moment on Bitcoin and crypto, I've changed my view to bearish. There was a sort of close to a double top level here, which probably sent it down as well. But technically, I'm looking at it as bearish. Fundamentally, guys, I'm really not 100% on the fundamentals of crypto and what makes it go up and down. There's a lot of news surrounding it, and there's a lot of things going on with crypto. And at the moment, there's a bit of pressure on it as far as I know. Okay. Yes, I know. I just haven't done it on these charts, Blue Mango, the settings to turn on the countdown. And I know, I just haven't done it on this charting package. I've got it on my other charting packages, and it normally shows up at the bottom. And I've just got to go into the settings and turn it on, but I'm not too worried right now. It's okay. Yes, why is that on the German DAX? We want to put that on maybe the S&P, eh? Let's see what we've got there. Because what I'll have to do, I'll have to change it for every single chart, or whatever the case on this particular one. I've got it on all my other packages, and this one it's not on. It's giving me the date and everything there, but yeah. Always got to go into the settings, look for the setting, and yeah, certainly. Every charting package, I tell you. But the one charting package that I do have set up the way I want it is the MT5. That one is set up nicely. I've got it working the way I want it, and that's perfect. That one is perfect. Actually, the C Trader is doing quite well as well. That one is okay. That one's trading quite well. And then what's the other one? Then there's the Trading View and yeah, the other account. So many different platforms. They're all the same. How's it, Carl? Actually, just counter trade, call the moon's thumbnails. That's all you need to know fundamentally. Call the moon's thumbnails. I love it, don't you? Who's Call the Moon? I don't know this person. Yeah. No, absolutely. But as I say, if I tell you anything about crypto, it's very technical and very technically based. And Look, my ear is to the ground. I mean, I hear people talking, in crypto, and I hear people saying things, but when people say things, I tend to think the opposite. You know, what do they say about a hot tip? These hot tips are never going to play out. You get these hot tips in the market, or you're listening to the news, and they're manipulating it, and they're saying it's going to go down, it's going to crash. And all the years that I've been trading for so many years, and listening to the news and the fundamentals and the stories and whatnot that go on in the background. And every time I hear these stories, every time these stories go on, 9 times out of 10, do you know what? It goes the other way. It always just doesn't go the way they were telling you it's going to go. The world is saying the S&P is going to crash and it's going to end, the world's going to end, and this is going to happen and that's going to happen. You know what happens, don't you? Somehow or another, the big money knows that that's not going to happen, and it goes the other way. Just follow the big money, and you'll be okay. Those guys are in the know. Did you know that the pros, or the institutions, the big money, their programs are just a few split seconds before you? They've just got a slight advantage on the technical side, by the way. But most of their stuff is done on a very wide basis anyway. But they've got information just before you. Insane. But yeah, that's because you're running through a broker 9 times out of 10. So you delayed. And they've actually got an advantage. There's been a lot of discussion about that. How someone can have an advantage over someone else in a trade, because this can cause an algorithm to try and make a profit. So yeah, there was a lot of talk about that. I said, nah, it's not true, but it is. They're ahead of the game. I have a small wick forming on the DAX, but it's usually towards the end of a candle. People are taking profits. It's such a small candle. It's such a small candle here. If you look at that, inverted hammer, there's a whole bunch of sellers coming into the market here. Yeah, no. Don't know. We'll see. But let it close, and then we'll see from there. I must actually put the settings right on this particular set of charts. The reason I'm using this set of charts is because somebody complained about the C-Trader that they couldn't see the lines nicely and all the rest of it. And besides, I like trading view, so it's okay. It's nice to trade on these charts. So we're trading on this package now. It's fine. It's great. And looks like we've made a profit on it as well, which is great. Okay. Is this chart slightly different to yours? On the 4 hour? That's interesting. Okay. That's not impossible. Let me go and have a look at something. I want to open my MetaTrader, or just let me just have a look at something here. I'm going to have a look at it on here, the DAX, and just compare it. Just compare it to that. You guys won't be able to see this, but that's fine. It doesn't really matter. Where is the DAX? Oh my goodness. Okay. Yeah. No. Sorry. I thought I still owned the Euro Great British Pound, but I don't. I was looking at that thinking, what? Let me just have a look here. Okay, the reason there might be a difference is, I'm just looking here, I think I found it. This one is the Germany 30. Okay, let me just see here. Yeah, the Germany 30 has got a slightly different candle on it, on a slightly different time frame. That's interesting. Yeah, that is really, really interesting. It's the brokers again, guys. You know, there's not much you can do about it. Just looking at that, because this is the DAX, the Germany 40. So let me just confirm this on my, where's my main account, my GT account. Let me just have a look at that. Now I'm just going to check on my main MT5 account. That'll tell me what's going on here. Where are you? Client terminal, there we go. Just want to have a look at my main account. Let's see what it looks like. Because that should look like this. If it ever opens. It normally takes a long time to open. But we'll have a look now and we'll just see what it looks like and what it says. Yeah, I don't think you guys will be able to see that either. That's fine. That's okay. No big deal. But I just want to see if it compares to that chart. Purely out of interest. Are you open yet? Wow, it's taking a long time to open today. Why is it taking so long? Okay, I'll come back to that now. It'll probably just suddenly go boof and open up on the computer. Normally opens up a lot quicker than that, to be quite fair. But I think it's the difference between the DAX 40 and the DAX 30, or the Germany 30. This is Germany 40. And I think it's got a lot to do with the different brokerages and the way they provide their accounts on these, especially on the funded accounts. And this is a funded account. That's a funded account. I just want to have a look at my main cash account and just see. Because you get these different results. And that's why I say trading is so 50-50, guys. It's so random. People think it's so perfect and the lines are perfect and everything's going to work out exactly this way. And it never does. And that's why you find the big institutions, what they do is they look at it and they say, oh, it's overbought, I'll sell it. Oh, it's oversold, I'll buy it. You know, it doesn't really matter exactly where the candle is or exactly what the level is. There's my charts. That's what I'm looking for. The DAX. Okay, so the DAX on my main account on... Okay, that's an H1, so I need an H4. And on the H4, so the DAX on my main cash account is very similar, but the candle on the end is an undecided candle. It's slightly different. So I'd like to open this up for you guys, but I don't want you to see my account number. Oh, it's like a bank account, this. It's like serious. Okay, but yeah, the chart looks very similar to what you're looking at on my main cash account. So I'm actually quite comfortable. Actually, it's just switching to green. It's actually just switching to green. It's red again. Very undecided candle on the end. I'm just going to close that off for now. We don't need that. I'm going to close it off. Oh, it looks exactly like this. No, you know what? My main account looks exactly like this one. So guys, this is the correct chart. If you're looking at the Germany, the DAX, this is the correct chart. It's Germany 40. And this is, I think, with FX2. Or is it with... Yeah. Okay, one of those. Okay. Always difficult to remember which one's which. I think this is FX2. Okay, it's got the Germany 40. There is a link to these funded accounts in the description as well. And then my main cash account showing me exactly the same chart as this. So that's 100%. This is the chart. This is the one that's working. If I go down to the 5-minute time frame, this thing's going to go mad. But yeah. You see on the 5-minute time frame, you may have a bit of a bull here, but it's going to go bearish because the whole thing is bearish. But let's just see on the 5-minute time frame. What have you got here? Yeah, it might come up to 23.8 and then go down. Eh? You'll have a few green ones up to here. It's going to take this money at 23.8 and then drop down. 23.8 is not far away on the 4-hour. So if we go back to the 4-hour and you have a look here, and 23.8 is there. So it's going to turn green for a short while. It's going to go up here, take that money, and then off she goes, most likely. Probably. Don't know. But yeah, interesting trade. So on the 5 minute, it's a bit green, but it's going to come down. I think it's very bearish. I think it's very bearish. I think it is going to go down. We're going to see a fall in the DAX. The complicated thing is if you look at the S&P 500, and the S&P 500 has gone up to retest here. It's gone up to retest this trend. And we need a red candle to bounce off of that. I think if you get a red candle off the S&P, and then you get this one confirming, then you've kind of got a good short trade here. And I think at 23.8, you might actually get a good short trade on the German DAX. And then gold, that still needs to come down a lot further, just to give us that level. All right, let's see what happens in the next 17 minutes. But that said, you are on the Germany 30, which is a slightly different level. And then there's this United States dollar, Canadian dollar as well. Similar picture here. Look at this. Breaking to the upside, red candle coming down. This is going to go up as well. I think this is going to go bullish. Looks like it wants to. And let's see what's happening to my... that looks like it's going to go the right way. All of these trades are going the way I expected them to now. Greg, when you say take the money there, can you explain that more? Greg, what I'm talking about when I say take the money there. Let me try and put this in perspective. I'm going to use gold as a perspective. When I draw a resistance line in, or when I draw a support block in, okay, or when I draw a demand level in. So where were we? We were on the DAX, right? And I was talking about the 5 minute chart at 23.8. Take the money there. So if I take this back to the 5 minute chart, if you look at this chart, there's a supply of money there. Okay, so a supply of money. I don't really want to draw this in because it's going to affect my other chart, but I'm going to draw it in and then we'll delete it. That's a supply of money. How do we get a supply of money? A supply of money is created by a green candle followed by a bunch of red candles, and a demand of money is created by a red candle followed by a bunch of green candles. So there's a demand of money at 23.754. There's a supply of money at 23.8. That is a supply of money. You could also be, for example, if you have a resistance level or a support level, that's usually money. It's an area where every time the price gets there, it gets rejected. Gets pushed down. That means there's orders there, and that means there's money there, people waiting to buy or sell. So for example, a supply of money here, there's people that there was a lot of money here that pushed that down hard. So in other words, there'll be a lot of money there to be taken when it reaches there and come down again. That being said, that's on a 5 minute chart. There's not a lot of money there, but there will be some. Now on the higher time frames, it's easier to show you that. So for example, if I draw a big resistance in here, every time it hits that resistance, it rejects. It's not bouncing off a line. There's not a line there. What's actually there is orders, which is money, which is institutional money, which means people are placing trades in that area, which is pushing the price back down. Price comes up, hits there, there's a whole bunch of money there, and it starts taking the orders, starts digging them out, and then it goes down, and it goes back. And then it runs out of money, and it comes back up again to try and find some more, and it goes, and there's sales, and it's just orders that are lying there waiting to push the market back and forward. And that's why you end up with these ranges, and very frequently either trends or ranges, because human beings are behind these lines. These are not lines. These are human beings that are trading behind these lines. Real people, you and me, that are behind these lines. Well, let's not say you and me, because you and me make up such a small percentage of the market. 95, 96% of the market is made up by institutional money. But they're human beings. They're not robots. They're not AI. They're not lines. They're human beings. And they all see the same thing. that you and I see. They all see areas. They all have their orders in that place, and their money is what's pushing it up and down. So they've got loads of orders in this area. They've got loads of orders in the area. How do we see that? Because every time the price gets there, it's rejected, which means there's orders pushing it away. Now, that's why we say the more times that a price hits a level, the more chance it has of got it breaking through, because what's it doing? It's chipping away. It's chipping away. Imagine there's a wall and you're chipping away at it. Eventually, you're going to make a hole and you're going to get through it. That's the same as this runs out of orders, or it runs out of liquidity, and it chips through, and eventually it breaks through. And that's what we call a breakout or a breakdown. It breaks through that level, and it goes because it's cleaned up all that money, and now it's going to look for something else. That's, Greg, if that helps you. I hope that if it doesn't, ask again. I'll try and go into a little bit more detail with regards to taking the money. But that's kind of what I'm talking about, is it gets there. You know there's money there because it's been there before. And human beings are creatures of habit, so they've left the money there for you to come and grab. It's like a little pot of gold, and you grab it and you're going the other way, whichever way, up or down. Remember, we trade the market both ways. You can make money going down, you can make money going up. It's such a brilliant market. Imagine a market where you can make money, whether it's failing or whether it's passing. It doesn't matter, whether it's going up or whether it's going down. Brilliant stuff, isn't it? You can make money both ways. 30 on one account and 40 on the other. Rob, what do you think about US dollar CAD? Thanks. US dollar CAD, I had that on a moment ago, didn't I? US dollar Canadian dollar. And I think I was looking at a bullish trade. Yes, bullish. What I'm looking at here, look, if you look at the US dollar Canadian dollar, Carl, here we have a resistance that I've drawn in. Very much a lazy resistance. I've just drawn a line in. I haven't gone to the day chart and drawn in the rectangle or anything like that. I've basically just put a resistance in, and I'm happy with that because I can clearly see the level. I mean, come on, that's so obvious. There's a level here and there's a level here. But every time it gets to this main support, it rejects it. So there is money in this general area. What you have to remember, if you draw a line like this, try and open your eyes up and make out, look, it's not just that line. It might be a little bit wider than that. Okay, so just keep that in mind. And I've drawn one in the middle here because there's two levels. There's a level in the middle here and there's a level at the bottom here. You can clearly see that there's a level here where it's running, and then it goes down into the lower level and it starts playing around there. Then it breaks back up into the higher level, and now it's playing in the higher level. At the moment, it's playing in the upper level. So that's your support and that's your resistance at the moment. If it breaks through that level, then it's breaking into the lower level again, and it's going to play down here. So at the moment, it's playing in this level in a range. Three ways that we trade. We trade in a trend, we trade in a range, and of course, we counter trade. Counter trading is the one thing that we use to give us our insight in the market. So it's in that range. It's bouncing off the support. What were we waiting for? Waiting for it to break through that resistance, that trend resistance. You know, it's a short-term trend resistance, but it is a trend. And you're breaking that trend, so you're counter trading that trend that you've got here within the range. That's the fantastic thing about a range. Is you're in the range, it bounces off the support. You don't just have to trade it. You can put your trend line in and see if it breaks through. And if it breaks through that trend, then you've got a confirmation with a green candle. Now that one is first green candle is on both sides of the world. It's on this side and that side. So you've got to wait for the next candle to close, and you want it to close green, not red. And when it closes green, then you can say, wow, I've got a long trade here. And you can trade that long with a great risk to reward, because your risk is here and your reward is up here somewhere. It'll be a great long trade as far as I'm concerned. Unless, of course, this red candle comes breaking down, back down to the downside again, of course, then you don't want to be going long. But my preference is the counter trade to the long side, the long trade here. It looks like it's counter trending, breaking that trend and moving to the upside. So that looks pretty decent as we stand at the moment for the United States. Canadian dollar versus the Canadian dollar. Let me just take that out of there. We don't need that there. That was a demand of money that was there. You see red candle, bunch of green candles. There was money there. that it had to come back and take, which it obviously did come back, broke through it, so there's no money left there, and it hit the support. All the money's lying at the support, taking the money on the support and going back up. But what you need it to do is break that trend, which it has done, breaking that trend, moving to the upside. So that's your trade, Carl. Nice long trade when that candle finishes in a green mode. That's all you got to do. Nothing complicated, nothing unusual. If you want, you can take it to the day chart, draw the main lines in, come back. It really, as I say, you know, when you're trading, you actually don't need any indicators on the chart. You don't even need these price action lines. You don't even need this. You know, you can basically look at a chart and say, oh, I think it's going down, take a trade to the downside, and then just impose the strategy, which is make more on your wins, lose less on your losses. If you've chosen wrong, which you will probably do in many cases, then just accept it and say, well, I chose that one wrong, and let it go. And then if you've chosen right, try and follow it and make as much money as you possibly can out of it. You don't need any of these lines on here. It doesn't really matter. But I put the lines on because psychologically it makes me feel comfortable, makes me feel like I know what I'm doing, makes me feel like I'm doing the right thing. And also, you know, with human beings being creatures of habit, you look at what they've done in the past and you kind of know where the money is and you kind of follow it. What you're looking for in these trades is you're not looking for lines. You're looking for the money, which is what Greg asked earlier when you say take the money. You're looking for the money. Where's the money? The money's there. It's clearly obvious. They're actually showing you where the orders are, where the money is. You know, you get these little order things on the side, especially on shares with the price and whatnot, the orders being taken and what have you. And it moves so fast, how are you ever going to pick where the money is? It's so much easier on a chart where you can just draw this line in and then you can see where the money in orders actually is, where they're being taken the most. And then you can just follow that and take it off of there. It's not that you're trading against a line. You're trading with institutional traders. You're trading with the movement of their money. And you expect something to happen based on that information. There is a lot of money at that level. You can see it. You can see every time it gets there, it pushes it down, or a lot of orders, let's say. Sorry, probably sell orders. So that's what you're looking at. And then it hits there, it goes down. Easy. When you take it in the middle like this, you're a bit less of an advantage, because then you're basically going with the trend. You're following the trend down. Nothing wrong with that, because it's a clear signal. It's broken through a support level here, which means that money's run out wherever it is in the middle here, and it's breaking down, and it's breaking down to the downside. So it'll probably come down and look for more money at the lower levels down here. All you're doing in the market is looking for the money. You're not looking for lines. You're looking for the money. You're looking for where the money's lying, where the orders are lying. Where are the orders lying? There are traders out there that do it without charts. They just do it with the order flow. But it is, more difficult to do it that way, looking at numbers and looking at the order flow and that sort of thing on any particular instrument. That's more difficult. Much easier to do it on a chart. And that's why we do it on a chart. I mean, it makes sense. Just makes sense. And it makes you feel like you're doing the right thing or going the right way. You know, so many traders out there will tell you that you need a win rate. What does a win rate buy you? It buys you some confidence. It buys you the right to say that I win more trades than I lose, or something to that effect. But it doesn't make you money. It doesn't make you profitable. All it does is give you a win rate. You know, it really is so dependent on how much you win, how much you lose. Win rate is meaningless if you're winning small amounts and losing big amounts. US dollar, Japanese yen. I was looking at that earlier. US dollar, Japanese yen. Boom, 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 boom. There you go. US dollar, Japanese yen. Look at that. Here we are. 4-hour chart. There's a level. I'm actually going to move that level up now. Because what do you see there? I bet whoever you can tell me what you can see when I draw that green line up there. Something really, 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 really important. Cheers, Dutchy. Good to see you. Thanks for being on board. US dollar, Japanese yen. Sir Lancelot, have a resistance line at 148.738, which could cause a bounce back down. So, David, do you see what I see at that level? Serious double top. It's hit there and it's hit there. Big resistance as well. And there's a red candle coming down off of it. If that red candle confirms, you're probably going to get a correction down to 147.150. It's short. It's going to be short. You do need to let that red candle just close. You do need to let that candle close. It's a good idea. You want to be sure if this is looking pretty short. You know, it's a good idea. Just take it to the day chart and just have a look. And there's a big green candle there, so do be cautious of that, even though it's hitting resistance. Let's just have a look at the weekly chart. Now, the danger that you have with the United States Japanese yen, United States dollar Japanese yen, is it's bullish on the daily and the weekly. So you're fighting against the current a little bit. But they are all hitting this resistance point. They are all hitting a point where it says, I'm pretty much done here. So I would go with that in the sense that closed red candle here, next candle, probably a short trade. The United States dollar, Japanese yen, short. So I think you said you are going short. So that's fantastic. So not only do you have a resistance, and you all called it correctly, big resistance, but we don't only see a resistance, we see a double top, big double top here. Double tops in any area are dangerous. When they hit the same level and they say, how's your mother? And they start going the other way. Very serious. Okay. If you take that out the way, suddenly it's just all you see is that. Okay. Okay. Dum 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 dum. Yes, Shane, just wait for the next candle to close. Absolutely. Just wait for that red candle to close. If that red candle closes, then we know. But if it closes in a green, then you have to be cautious, because then it might try and break to the upside. Okay. Don't get too overcomplicated. You know, but there is a big gap here that it could come down and take money from. There's all kinds of technical things that you can put in. I mean, Shane's calling order blocks and things as well, which are here. Just be simple, and just look at it. You got your double top, you've got your resistance. Let the red candle close, tell you which way it's going. You get a green candle, you're getting a breakout. A breakout would be even more serious, because that'll go all the way up to these levels at 151. A red candle will take you back down to 145 most likely, or back down to this gap here, 147.5, somewhere around there. That's actually quite a nice trade. It's actually not a bad trade, a good short trade. You can look at that. And it'll probably follow with the DAX. And the DAX is probably going to look for these lower levels here at 23.5 if it goes down. Okay. I took long Euro CAD yesterday. It didn't work. Lost this morning. Do you think it was a good move yesterday? Thanks. DAX 4 hours closed with a big wick breakthrough level. Extra. I watched a Forex study looking at mean reversion versus breakout. Conclusion was most currency pairs do well with mean reversion, except for JPY pairs, which is better as breakout trades. Well, that's interesting. Very interesting. I just want to see, Coral, long Euro CAD. Let's just see how that did yesterday. and what went wrong there. Boom, 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 boom. What went wrong on the Euro CAD? So you took a Euro CAD. You took a long on the Euro CAD. Now you see the Euro CAD, if I look at it, my main concern for you taking a long would have been this, and that is that level there, that breakdown. That would have concerned me because it's broken below that, and there's nothing here to hold it up, nothing at all. Looks a bit weak. Let's just see where the long trade was. No, not seeing a long trade. What I'm seeing here, okay, let's make that green. It's got to go green now. That'll be your next long trade, and I'm just going to draw the support in here. To see what we've got. Level down here, level here, not too bad. Yeah. Interesting. Very interesting. I'm just going to draw this in here. Make that the red one. You can draw these however you want. It's a 50-50 thing. I'm just looking for where you went long. Not seeing the long trade in any way, shape, or form here. You might have taken the long trade there. Okay. But it's hit this resistance level, hit a serious resistance level, and broken to the downside. So where the long trade would have been great, I think what you're looking at here on this particular trade, and I'm just kind of trying to analyze it the best way I can for you there, Carl, because I can see that if you did take it because of that, then I can see why it would have been sort of attractive to go long. But what I would look at is if I've drawn my resistance in and I've drawn my support in, I'm going to look at my risk to reward. So even though it would have broken through that trend resistance, it was trending down, it counter traded, it broke through. What I would look at is my risk to reward. And your risk to reward on this, it would have been a long position, right? So a long position, my risk to reward on this would have been as follows. And that is, you take the long and your reward is that, and your risk is that. So what you see here is a picture of your risk is huge and your reward is small. And that's probably where you've gone wrong. That's the only place I can see. I wouldn't have taken the long trade based on the fact that my risk to reward wasn't there. I would rather have waited for it to break through that main resistance level before taking the long trade on breakout. So you've got a trend breakout, but you must also watch your main resistance level, because you might end up with a very poor risk to reward situation where your risk is way down there and your reward is very, very close. And that's what's happened here. You would take the long trade, looks great, it's a strong resistance and breaks to the downside. So that's where you go wrong sometimes. You know, if I take this green line out of here, then suddenly it looks like a great trade. You know, you think, wow, what went wrong? Why would it go wrong? And that pincer top wouldn't have been there, but your resistance would have been over there. There's a level there that goes all the way back that you've got to look for. And, you know, you've got to keep that in mind. And that's where you go wrong, is you don't put that in. I know that wasn't there, but that was. So what I would normally do, as you see on most of my trades, is I'll go back and just put those levels in. And those levels will tell me, okay, that's a prior high. You know, that's a resistance level. It could be a little bit lower, it could be there, it could be higher. It doesn't really matter, but it's there, okay? And when it hits that, it's going to come piling down. And then you get that pincer top, it comes down. And that's the reason the trade failed. It did actually succeed and then fail. But it was just a small risk to reward, and that's where it fails. Okay, so that's what you need to know. You need to draw those levels in. It's the same as if I take this German DAX trade short. I'm looking at my risk to reward and I'm thinking, where's my risk? Where's my reward? If I take this trade short, how's it going to work for me? How's it going to play out? And then what I'll do is I'll say, I don't want a fib channel. I'm just going to draw this green thing in so you guys can see what's going on. If I took my trade here, my reward would be down to here. My risk would be over there. It's not the best risk to reward. It's very much one-to-one. It sort of gives you a picture of where you're going, you know. You got to draw these support lines in. You got to have them in. You don't just have your trend. A lot of people only trade with a trend line or their levels, their trade levels, trade railway lines, you know, and they don't put the support and resistance in. So if you only trade with the trend, if there isn't a support and resistance that looks viable, then that's fine. But if there's a range of any kind, you need to have those levels in so that you can determine where you're going. You can determine what your levels are, high and low. You can determine, am I going to bounce off a wall when I take my trade? I think in general, a lot of people like to do a lot of research on the markets. Like Nick says, the Forex study looking at the mean version versus breakout. And, you know, it's so difficult because that changes on a regular basis. And it depends on the year, depends on the markets, and it depends what's happening. You know, statistics. And we go back on statistics, and that's what we do. We do the same things over and over again. But in general, the thing to look at on breakout is a breakout or a breakdown can make you a lot more money than a normal trade. So you got to look at that as well. So even if all the currency pairs only win 4 breakouts out of 10, so let's say 6 lose. If you have your stop loss in place, those 4 that win will usually be huge trades. They'll usually be decent trades. But that said, mean reversions also, you get some decent trades out of it. I mean, it's very difficult to call something like that. And say, well, the Japanese yen's good at breakout, and the euro US dollar's only good at, it's not so good at breakout, and it's always a difficult call. I'll just trade what I see and go with it, because if you get a breakout on one of those other ones, you're probably going to get a really good trade. S&P, good at breakout, but it's trending, you know. It's difficult. DAX, anything for that matter, crypto, it's always difficult to get that kind of information. What happens in the market is traders get bored. They start doing all these calculations. They start going over things over and over and over and over again, start putting spreadsheets together, start creating little systems that tell them that if the market does, if this moves that way and that moves that way and the moon moves slightly to the left and the sky changes color, then you should take a trade. We get bored and we do these silly things, and then it's just simple maths that we're doing, and we're trying to convince ourselves that we're finding a solution to the market. You know, one day, if someone ever finds the solution to the market, boy, will they be rich. Because there is no solution, because we're dealing with each other. We're dealing with human beings in the market, which is why we have a strategy that says make more on your wins, lose less on your losses, because you can't predict the market. You can't predict which way it's going to go. The old way that we looked at things, which is why you get this idea of the strategy, is because in the old days, the old men used to tell me, Rob, it's not timing the market, it's time in the market. The more time you spend in the market, the more money you'll make. Just invest, stop trading. But I kept on trading because I like trading. But they were right. But if you apply that time in the market to strategy, and you start positioning, and you start using a strategy, then what happens on the charts and what happens with all the information that you get on the charts doesn't really matter anymore. It starts to become more irrelevant. In other words, if I take this trade because the chart says I should take this trade, it's irrelevant what the chart says. It's telling me that I should go short. So the chart's telling me that. So if I was worried about win rate, I'd be like, yeah, okay, I've got to take that so that I can get the win. But effectively, the way to make money out of this trade or lose money out of this trade is to have a stop loss and to have a take profit and to have a decent risk to reward on it. That's how you want to take the trade. You want to try and strategize it so that you're going to make money no matter what happens. You're either going to lose a small amount or you're going to make a big amount. The point is, over a period of 10 trades, you want to be trying to make a profit off those trades. Jamie, what says when he looks for too much confirmation on the market normally takes off without you. Besides that, Jamie, what it also does is if you start putting too much confirmation on the charts and you start playing into the charts and you start playing into the maths and you start doing all these extra things and creating spreadsheets and whatnot about how you think you should buy in the market, you start trading against yourself. You see, if you put two traders together, there's a good chance one will say, I'm going long because of this, that, and the other. And the other one will say, I'm going short because of this, that, and the other. That's what you're going to get. But when you put all that stuff onto your own chart and you start confusing yourself, then your own brain's going to start saying, go long. Oh, no, go short. Oh, wait a minute. Maybe I shouldn't trade. Or wait a minute, I'm going to go short. You're going to start confusing the hell out of yourself because you've got all these different systems on your chart. Because charting is 50-50. There's no guarantee which way a chart's going to go. It can't predict the market. Neither can you. No one can predict the market. But you can just give yourself confidence taking a trade. Oh, I feel it's going to go that way. Give yourself an advantage by having a strategy that helps you to make more money on the winning trades that you choose. As I said to you earlier, you can take all of these lines off the chart. You don't need lines on the chart. You can just go, I'm going to go long there. I'm going to go short there. And then you can just manage the trade. That's what it's about. It's about managing the trade. Some you'll win, some you'll lose. But we do feel more confident if we've got a price action system in place. We do feel more confident if we've got some lines in place that help us to choose which way we're going to trade. It helps us to have a high probability in our minds when we're taking a trade. We believe that we're right. There's no trader out there, 100% of traders, when they take a trade, believe that they're right. Why would they take a trade if they were wrong? So they believe that they're right. But half of them are wrong. More than half. Got to ask yourself the question, eh? So it's just how it is. You have to adapt to it. You have to understand that we're going to take losses, and that's how it goes. And don't forget to hit the like. Yeah, thanks, Sir Lunchalot. That's great. Let me just see here. Great British Pound US dollar looks like a long for Sir Lunch. Let's just see. I'm going to use that chart. Great British Pound. Did you say Great British Pound US dollar? Yeah, Great British Pound US dollar. Okay, there we go. I've obviously marked it up previously. Wow, what a red candle. Okay, so what you've got to be careful of here, when you say that looks like a long to me, is the size of that red candle going down. And there was some money there, a demand area, and that got wiped out without any hassle. So that's straight through. It has hit the support level. It's happily hit that support level, but there's a good chance that it could carry on and go through to the next level. So I would be a little bit concerned about taking a long trade on the Great British Pound US dollar. I'm looking at this. Overall, it's got a bearish tinge to it. It's sort of falling down. There is a resistance there. There is a support that has hit the support. That's a very undecided candle. But if that candle goes red below that level, it's going down. And if it goes green and starts to go up, you might get a bounce up. I would wait and see what it does. I wouldn't take this trade right now. I would wait to see what it does. My preference on it, though, would be a sell as it stands at the moment. As I look at it right now, it looks more like a sell. Just glancing at it, well, from a distance. I mean, there's a whole bunch of reasons. If you were to take Shane's fib that he likes to trade with and put that on here, then even then you need to come down quite a lot further to even get into his golden zone down here. If it breaks through there, it's going to come down to these lower levels at 131. So no, I wouldn't go long on it. No, I'd be short. I'll be short on the Great British Pound US dollar. And yes, please do hit the like button. Give me some likes, man. Give me lots of likes. I like the likes. The likes are good. Yeah. Okay, so the DAX 23,687, which is pretty close to where we are now. This candle is going down. Probably should have taken the short earlier, but it's kind of a one-to-one trade. But it does look like a good short trade for those who want to take it. For stock indices, wake up in the morning, and if the current daily candle is green, go long. If red goes short, refine entries with 5-minute chart. You know, the problem, Nick, I hear what you're saying. If you wake up in the morning and the candle's green, go long. If you wake up in the morning and the candle's red, go short. It's almost like the opening range breaking trade, okay, or breakout trade. Yeah, sorry, I got that wrong. Now, the problem with that kind of trading is what I've seen often, very, very often, is when markets open, it'll go long for the first few minutes and then it'll turn around and go short. Or it'll go short for the first few minutes, turn around, it'll go long, turn around the other way. So if you open up on a green candle, there's the likelihood that it'll turn red. I prefer, when I'm looking at the trading, to rather take the whole thing to the weekly chart, see what we got in the week, big red candle, see what we got for the day, big red candle. That looks pretty bearish to me on the higher time frames. So what I'm looking for on the lower time frames is short trading. So I'm thinking overall bearish. So if I take it down to the 5-minute chart, I'm definitely not looking for a long trade here. I'm looking for a short trade. So keep that in mind. You know, if you're looking for sniper entry and you're looking at going through the time frames, do yourself a favor. Look at the higher time frame and see what it's doing. And if the higher time frame is saying the world is bearish, then in all likelihood, the lower time frame will follow suit, go bearish as well. So just keep that in mind, guys. If you're playing with time frames, the higher time frame holds sway. The higher time frame is more powerful than the lower time frame. The lower time frame is, let's say, less powerful, less strength. Okay. I'm trying to find the words for that. You know, when you're on a live show, sometimes it's difficult to find the words. Okay. And then are we back on gold? Yassine, Coral's gone long on the US dollar, Canadian dollar, US dollar CAD. Coral, US dollar CAD. Let's just have a look here. Good trade. Love it. Love your trade. I would wait for that candle to close, but it's long. Yeah, you're good, Coral. I like your trade. And also, you've got a good risk to reward. Because let me show you your risk to reward quickly. Just out of... I know, what have I done here? That's the wrong one. I want that one. Okay, sorry, wrong one again. I want a long trade. Let's do that, long position. So you've gone long on the US dollar, Canadian dollar, and your risk to reward is pretty reasonable. Not bad. Close to 1-to-1, but it looks like a decent trade. And you might even get reward all the way up to the top here. So, yeah, it's okay. It's okay. Nothing wrong with that. Great trade, Coral. Good work out for you. And then gold, as I said, Yasin, gold, we're waiting for the long trade on gold, but we've gone through this process quite extensively. I'll go through it again. You have to understand that there's a main resistance here taken from the daily, and there's a 4-hour resistance here taken from the 4-hour, which it broke through, and it broke through. These are now becoming supports. And you've also got a trend support running through here. So if this price comes back, it's the main daily support and the main daily support trend and bounces up with a green candle, you can go long. You have to be patient. You have to sit on your hands and wait for this one. If it breaks down and breaks through this level and hits the 4-hour, then you have to see, because this is also in a golden zone on the fib, if it hits this level and gives you a green candle to the upside, then you might have a long trade. But if it breaks down through this level, you might have a breakdown all the way down to the lower levels here. So what we're waiting for and what I'm hoping for is for this to come down to this daily level, hit this daily level, give me a nice green candle off of the trend support and the main support to the upside, where we can carry on going up. Hot tip of the day is everyone's shouting for you to buy gold, which is normally a good signal to think, maybe I should sit on my hands and wait. Maybe this is going to go short. Okay, so just keep your mind on that. When people are calling for it to go long, there's a good chance that it's going to go short. Shane couldn't hang on any longer and has gone short on the German DAX, which is probably a good choice. Probably a good choice. You're probably going to do quite well out of that trade. And Shane says it's not financial trade. Shane, that's my saying, not financial trading advice. That's my saying, man. But it's a good saying, eh? Yeah. I don't give advice. Yeah, no, totally. Yeah, you got to be careful because people will take it as, yeah, you told me to do that. No, I didn't. Everybody does their own thing. Okay, so Shane, you probably got a 1-to-1 on that, but it's fine. Just follow it down. Blue Mango, Shane wants your contact details. Shane, you're going to have a lot of contacts on here. Nick, I tried to go green. If close green, took inspiration from roulette, follow the winner. It does work. Yeah, sure, no problem, Blue Mango. You stole it. Yeah, totally. That's fine. Since you watch all the ads, you can do the no financial advice thing. Yeah, no, you're making me want to go short on the DAX as well now. But it is a 1-to-1 that you'll have to follow, and I don't really want to do that right now, but it looks like a decent trade. I said I would sit on my hands and wait for this to go back and retest, and now it's just going straight down. You see, I should have followed my FOMO, man. Should have taken the trade. Okay. Yeah, Shane, I'll share your details with Blue Mango. Blue Mango, just send me an email, and I'll send you Shane's details. Okay, so Carl, what you're actually doing there by following the winner, it's the 3 ways that we trade. And the one way is trade with a trend, and that is following the winner, trading with a trend. So for example, if I trade on this German DAX, or Shane trades on this German DAX. He's following the trend. The trend is to the downside. It's failing, it's dropping, it's breaking down. So you're following the winner and you're following it down. And that's a good way to trade, trading with a trend. We trade basically the three ways, right? So we effectively trade with the trend, we counter trade the trend, and we trade in a range. And trend trading, there's nothing wrong with that. But the reason I trade the three ways is because all three ways work. And counter trades have made me a lot of money. Trend trading has made me a lot of money. Range trading can't go wrong. So all three, if you identify it and it looks good, go with the flow. What the hell? Go with the flow, make some money, do your thing. See, S&P 500 is a good example of what we're talking about just now, especially with Nick, where we were talking about when a candle opens and it's a certain color, go that way. But what we've got on the S&P 500 is we've looked at it on the 4-hour, it's green. It's going red, but it was green. It's gone red, just gone red as we talked about that. But anyway, on the day it was red and on the week it was red. So pretty much bearish. Rather look at your higher time frames, get your bias from there. And then that'll tell you which way the market's going. And if you're trading on the 5 minutes, then, for example, then the day should be bearish the whole way, right through. Just follow the trade downwards because that's a red candle. Hey, Luigi, I didn't see you there. Welcome. Good to see you again. Good to have you back on board. Yeah, but Shane, on the DAX, I don't want to do the opposite to you. It does look pretty bearish. Boom, 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 boom. Boom, 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 boom. Is Europe closed for business? Business. Europe is going down quite nicely. Look at the Germany. Look at it. It's falling down. Lots of volatility there, my mate. Lots of volatility. No, Blue Mango, stop keeping a trading journal. I used to, but you know, it's important. Hi from India. How's it? Welcome. Blue Mango, it is important when you younger, starting out, new to trading, to keep record of how your trades are doing. And what I used to do with my journal is that I would have my entry points, I would have the date of entry, the amount of entry, why I took the trade, what inspired me to take the trade, and even a picture, like a screenshot of the trade on the chart, so that at the end of the week I could go to my journal and I could go back and I would have a look at why I took the trades and what I did wrong and what I did right. And back then it was important to me because I needed to work out where I was going right and where I was going wrong. When I stopped journaling is when I realized that charts don't make you money. And when I realized that it's the strategy that makes you the money, not the charts. Then I realized that trading's 50-50. And while the journals did help me along the road to price action trading and trading with charts and systems and things like that, they didn't really help me much with the actual strategy. They didn't really help me much on the strategic side. I mean, if I want to get a history on how my trades went, that's easy enough. I can just draw a statement. So I don't need to worry too much about that. And effectively what I figured out was, I'm taking trades on charts and it doesn't really matter which way they go as long as I manage the trades with a strategy. So somewhere down the line, and I can't even remember how many years ago it was because it was a very, very long time ago, I decided that charts weren't the way to make you money. It's how you strategize the market that makes you money. And I basically stopped journaling the charts. I just stopped worrying about the charts as much as the strategy. And the charts actually became a lot simpler and easier to work with. How can I put this in a nice way? It became less of a bugbear. I'll look at a chart and it's not as important as it used to be. You see, in the beginning, before I would have this strategy mentality where I would have the chart mentality, and the chart to make money off the charts and that sort of thing. And I would try and pinpoint everything perfectly, and I would research it, and I would also have all these spreadsheets and all these things working everything out. And if the chart does this, and it must do that, and the moon must move to the left, and I must take a trade there. I spent years doing that, years. And that's why journals came about as well. When I realized that that's unimportant for me, now it's so simple. I've reduced everything to a blank chart and just draw a line in there. Oh, there's a resistance. Draw a line in there. There's a support. Draw a trend line. Oh, it's counter trading. It's breaking up. There's only 3 ways that I trade now. I used to trade about 1,000 different ways. Now I just trade the 3 ways with the trend, counter trade the trend, and in a range. That's it. There's no more to my trading apart from maybe a little bit of, because of all the things I've done in the past, a bit of supply and demand. Maybe I'll see a gap in the market or something ridiculous, which might inspire me to take a trade. I might even look at the FIB or the RSI or whatever the case. But those are actually the only 2 indicators that I might actually believe in. But further than that, that's why I don't journal anymore. It doesn't matter to me anymore. Journaling is, I mean, I'm actually wrong in telling you guys not to journal. I'm totally wrong. I should tell you guys you should journal your trades, because if you journal your trades, then you know what you did wrong last week. You can work on your trades. And it is a good thing to journal if you want to know more about your charting and what you're doing right and wrong with your charting. But understand that the charting doesn't make you money. It just gives you the trade. It gives you the high probability. And your journaling is not going to tell you much about your strategy. Your strategy is what makes you the money at the end of the day. And you've got to concentrate more on that and see how your wins go. If you want to see how your wins are going, maybe you want to have a journal that says how much percentage you made on any particular one trade or whatever, but you can get that off a statement as well. It's not that important. Be careful of making more work for yourself. Let me put it that way. Be careful of making more work for yourself. Be careful of making too much work for yourself, because that's what traders tend to do. Traders tend to make all these little things up that they got to do, maybe because you're bored. And then you do this and you do that. You do this test and you do that and you do this, and you add all this work. And instead, you should just be concentrating on making money. You should just be concentrating on taking trades. Too many people create too much work for themselves for absolutely no reason. And how much profit can that make you? There are jobs where 80% of the research is it doesn't make you any money, makes you the 20% of the money. But with trading, you don't need to do all that as much as you think. A lot of people will tell you have to spend hours researching. You have to spend hours doing all this testing. You have to spend hours drawing all these spreadsheets. You're just creating work for yourself that you don't need to create. Seriously. I've done backtesting, and if the candle is green or red by a certain percent, like yesterday, it closed relatively well, so trade takes a bit to establish direction. So you see, I agree with you, Nick, but you've got to look at the time frame as well, and which way. I would say, look at the higher time frame and determine what color the candle is, which way the market's going, and then if you're trading on the lower time frames, follow that higher time frames candle. Just my 50 cents worth on that, but yeah. Yeah, no, totally. That's why I say I don't want to tell you guys don't keep a journal. What I'm saying to you guys, if you're keeping a journal, understand that it's just to improve your actual trading on the charts, to improve where you're going wrong, where you're going right, what you're doing wrong, what you're doing right. It's not going to make you money, but don't make too much work for yourself. But do the journal and keep an eye on what you're doing. Keep an eye on your trading while you're learning the charts, while you're learning which way is up and down. But just remember that your money's made by strategizing correctly. The charts will just help you to take the trades. Journaling will help you take the trades the right way on the charts. Shane, it also helped identify certain emotional mental states that impacted my trading. That's actually a good point. If you journal your mental state, which I never did, but a lot of people might do that. That's actually a really good idea, to journal your mental state. If you can identify your mental state on any given week or day, then yeah, that's great. But I mean, I do have certain rules in place, for example, on mental state, where, if I'm losing trades regularly, then I'll stop trading just for a couple of days or a day and just recoup, and then just come back to what's going wrong. I don't need a journal for that. I just need to stop and think, what am I doing? What's going on here? Why am I going in the wrong direction? It might not even be me. It might be just that Donald Trump's saying all kinds of strange things or something. But it does sort of level your head. Yeah. Yeah, that's Henny started a journal about a week ago. Like I say, a journal, just don't overdo it, don't overcomplicate it, don't make it too serious. You know what you can do for a journal, and this is something that actually helps a lot. Instead of having a million different questions in there and a million different things to fill in on every trade, which takes hours, just screenshot your trade. And most of these things, you see this little camera on the top right hand corner, you can just click it, you'll download the chart. When you take the trade, download the chart, store it in a file, and say, that's my trade, and that's why I took it. And you can draw a few pictures on the chart as well, write on the chart as to why you took the trade. Then you can always just go back to that chart as a shot and just say, this is the trade I took last week. Why did I take this trade? And look at the chart now and compare the two and see why you took the trade, and then just go back on it. It's actually easier than a spreadsheet. I actually found when I was journaling that I very seldom took the time to sit and go way back on the trades and look at why I took trades. I really did not spend a lot of time on that. I actually found it easier just to look at a screenshot of the chart that I took and see where the difference was and what went wrong. But that's just charting, guys. It's just charting. It's nothing important. Trades are 50-50. Depends what you're angry with, honey. Don't trade when you're angry. It depends. If you're angry at the trading and you're angry at the charts and you think the world's coming down on you and following your trades and searching out your stop loss, then don't trade. Just stop. Because then you're going to start trying to get revenge on the trades. Maybe also don't trade when you're angry with the world as well. It doesn't help. Yeah, no, totally. You've got to have a level head, level concentration, and you've got to be calm. This much I'll agree with. Yeah, totally. You've got to be very calm when you're trading. You see, it's all psychological. It's all psychological. And as I've said to you guys a million times, it's all in the head. It's all in the fear. It's all in the fear of missing out. It's all in the patience. And if you can't be level-headed, and if you're angry and you're tense or you're fearful, that's when it all goes pear-shaped. That's when it all goes wrong. It's easy to look at charts all day. It's easy to sit and look at charts, and it's easy to have a journal, which, what did I do wrong on the charts? What did I do right on the charts? And that sort of thing. It's easy to put everything into charts and say, well, it's the charting that's making me money. No, charts don't make you money. Charts don't predict the future. Charts give you a trade. That's not what makes you the money. And the problem with that is to get around the fact that it's not the charts, to get around the fact that it's up here in your head, that the money's made, the strategic way of making money and a business plan to make money is not about charting. You take a trade and then you can't expect the charts to go a certain way. You have to understand that there's going to be losses, and everyone takes losses, and you're going to lose more than you win, and more trades than you win, and you're going to have to make more on the profits and lose less on the losses. Yeah, we put It's very difficult. I understand it's very difficult to get away from these charts. It's very difficult to get away from this. These are charts. I mean, you started trading on charts. This is what it's all about. You've got a million screens all over your wall and big fancy things, and you're sitting there and you're trading on these lines, and somewhere down the line trading went wrong, and someone told us that charts are the be-all and end-all of trading, and they're not. You know, there was a time when I started trading, there wasn't even computers, guys. You know, a chart was a pain to me. It was like a journal is to you. It was an absolute pain. I had to draw it physically. Imagine, I had to draw my own chart. You know, take the prices out the newspaper and plot a chart like I did at school with graph paper. I mean, insane. It was more of a pain to me than anything else. So, no, charting is there, and it's nice to have computers. It's nice to have all this fancy equipment, and it's nice to be able to draw a line and say, oh, there's a support. Let's see where that's going to go. Take a trade off of there and make some money. It's easy to do that. It's nice to do that. But at the end of the day, guys, back in the day, there wasn't even charts. And nowadays, we believe that charts are the holy grail of trading. Where did that come about? How did it come about that charts are the holy grail of trading? Charts are not the holy grail of trading. Charts just give you the probability. And they work. That's great. I mean, I want to take a long trade here. I want to take a long trade off this United States Canadian dollar. The probability is there. Someone here, I think it was Carl, took this trade a few minutes ago on the United States Canadian dollar. United States dollar, Canadian dollar. We took the trade and he said, I'm long. It's great. But look, you've got a bit of a red candle developing there. Are you going to panic? No. You've got a 50-50 trade. You've probably put your stop loss down here. You're far away from your stop loss, and you've probably took your take profit up there. So now it's positioned. Leave it alone. Walk away. Look the other way and look at other trades. Don't let the chart affect your mindset. Journal it. If it goes wrong, go back and look and see what you did. Yeah, go back and say, perhaps I should have done that rather than that, and it would have worked out better. Or maybe I should have seen that resistance level. Remember, we talked about that earlier. Maybe I should have spotted that before I took the trade, and that sort of gives you that journal. I would say your burst journal for charting is just to, like I say, download the chart, do a screenshot, whatever the case, write whatever you want to on the chart, what you did, and then come back to it when it goes right as well. If your trade goes right, go and see, why did it go right? Why did it actually go right? I don't need a journal for that. I mean, this trade that we all know about together, we took last week with Shane, and we took it out of this level. And I remember why we took it out of this level, because I looked back and I remembered that it went into this level a number of times, and every time it gets to this level, it rejects it and sends it up. So we took the trade, and what did it do? It rejected it, sent it up. When I remember why I took the trade, I don't need a journal for that anymore. I know why I took the trade. I can go back to any trade and I know why I took the trade. Why did I take the United States dollar South African rand? And you're going to look at me and say, well, why did you take this trade? Well, I know why I took the trade. I took the trade because I fundamentally believe that the South African rand should be weak. That's why I took the trade. I know why I took the trade. Brent crude oil, similar situation. And so why would I take the German DAX? Because it's giving me big red candles going to the downside. I mean, that's why Shane's taken it, following the trend. Potential level. No, I didn't go on in the DAX. I have not gone on in the DAX. I've been talking too much rubbish, and I have not gone in on the DAX, and now it's actually going quite well, isn't it? But it's okay. I'm not too concerned about that right now. Okay. I've been talking too much rubbish here, and I forgot about it. And it's gone. And I did say I would be patient, and I haven't, and it's this candle hasn't closed yet, so yeah. But it's getting pretty close to the levels, isn't it? What's it going to do this afternoon? Just be careful, guys. I believe this week there's some big jobs figures or something coming out that are going to affect it. But 9 times out of 10, it'll just bring it back to where it was. So don't panic. But if you are trading around it, just watch where your stop losses are, because you might just get traded out of a trade because of, a bounce or whatever the case. Just watch out for that. Yeah, just be very careful of those bounces in the news, because they can affect you in a rather big way. Now, let's just see, did our Brent crude oil start to go up now? Yeah, it's breaking out. Look at this, guys. It's Brent crude oil is breaking out, breaking above that prior high, which is great. This looks like it's going to go up. Looks like it's going to make us some money as well. I've got that trade on about 3 different platforms. So that one, United States dollar, South African rand as well. S&P I'm going to have to look at, because I'm actually, this is breaking to the downside, and I'm long on that on one of my main platforms. So I'm going to have to just check. It's getting a bit low, and it's concerning me a bit. There is a level here where there's some money at 63.75. I must just keep an eye on that, because that is going to concern me. Okay. Thanks, Annie. Yeah, when I say that, I don't really mean that I'm talking rubbish. I'm just like rambling on. Yeah. Obviously, it's not rubbish. It's important information, isn't it? That's stuff that you guys actually want to know about. Totally. Yeah, I get that. I get that. Yeah, when I say it, I don't mean, oh, look, guys, crypto. What did I say to you earlier, right? There she went. She broke through, broke down, came down, along, going back up to retest. Are those red candles over there? Is that a retest that I'm seeing over there? It hasn't broken to the upside. It looks like it wants to break to the downside. Bitcoin and crypto, Bitcoin could go short. Now, I know there's some noise in the background and the news and stuff. And as I said to you guys, I'm no expert on that in crypto. But that looks to me technically like it's turned around, come back, retested, and it's gone, I think we're going to reject that area and head back down. This is beginning to look like a short trade. So guys, Bitcoin looking short, eh? Jobs Wednesday, yeah. Nick, I used to honestly hang my hat on these jobs figures, and the non-farm payrolls, the normal jobs, and I tell you what, drove me insane. I would wait for that, and I'd wait for the CPI and the economy and interest rates. I spent every week, and it was Wednesday, Thursday, Friday, constant. Monday, Tuesdays were never that bad, but Wednesday, Thursday, and Friday were hectic, man. Drove me insane waiting for the news. And I used to trade around the news. It was really important to me. And then I stopped, and I just started looking at the main fundamentals, the bigger picture, like the economies of the country, bigger geopolitics, things that are happening in the world and stuff like that. And I stopped worrying about these weekly news items, because they would just give me heart attacks. But what I do still do is keep an eye on the fact that they are there. Like, for example, when the Fed's speaking in America, wow, can markets move up and down when that's happening? So what you need to do is watch out for where your stop losses are. So what I would do is say, well, I've got Brent crude oil. Where's my stop loss? Just keep it far away, so that if you get one of those nasty candles coming down and going back up again, that it doesn't spike you out. Because that's what tends to happen in news events. You tend to get spiked out of your trades. And that's where it's tricky. For example, yesterday when we took the Australian dollar, when I put my stop loss right up there at profit, I realized there was a chance of getting spiked out. But effectively, we just got taken out and we took our profit, which is great. But I also realized we're at the profit target, so it's okay. I don't mind. But there are trades like, for example, there's this one here where I would say I don't want to get taken out of this trade for no reason at all. If this thing suddenly spikes both ways, I'd rather stay in the trade, so because it'll settle back to where it was. You got to watch out for these news events. They can do that to you. But yeah, I spent years hanging my hat on news events, and boy, Was that a waste of time? And I don't know how many of you guys are capable of calling the news event the right way around. It's so difficult. Let me tell you, you think you know it. You think you know because the jobs figures are going to be higher, so everything's going to go the long way, and you start taking the trade and it goes the other way. And you think, what didn't I know? What did I do wrong? And it just happens so often because the institutional traders have got some kind of information that comes out a little bit later on that says, oh, but this is happening, or we're readjusting the figures, or whatever the case, and they always catch you out with that. They get you thinking that it's going that way, and you get in the news and you think, oh, I'm trading that way, and then an hour later they're like, oh yeah, but no, actually, we were just doing that because we're thinking about left and right. And, I tell you what, it can drive you insane. So I effectively stopped trading with the news, stopped trading with the news completely. I trade on fundamental information. Yes, that's big information, general, what's going on, and tariffs are affecting markets, things like that. That's important. That's stuff you need to know. As Nick says, news events are tough on algo bots. And as I'll talk about algo bots on a regular basis, and I'll say, a human being programs an algo. An algo is not some special thing in the market that understands more than you and I do. It's just programmed by some human being. So what I do is I program an algo to trade my system, and it understands my system. But you must remember, it's programmed to do a specific thing, and it can't change it. It can't think for itself, can't change its mind. It just does what it's told. It can't hear when the Fed's talking. It can't hear when the news events are coming out. It can't hear what's going on. It just trades on a technical basis. So algos get spiked out quite regularly on those events, and those events are regular. They're every week. They're every week, and every week they're every day. And every day you get these events that are going to cause these issues, and then the algos struggle. The algos, yeah, it's difficult to make money with algos, I must say. Yeah, Shane, if you're short-term trading and you want to do that, it doesn't always work, by the way. Sometimes they keep on going, but yeah, it's not a bad system to have, where you wait for a news event, watch for a spike, and at the top of the spike, or if you can call the top of the spike, try and do the opposite and try and play it the other way while it relaxes down, and try and take the money back. But you got to learn how to call that. It's not a bad system. It does work, but you do sometimes get things which where did I see it now, which can change things in the market. I'm just going to look for that. Something of interest. It might have been here. The big candle, the big strong candle. Just watch out for the big strong candle that rips you downwards. Okay, those are nasty. Nothing here, but there was a few that I saw. Where you get the big like that. Okay, you get that big candle goes up. That's on a 4-hour, and it doesn't come back. That you'll get caught out on those as well. So just watch your risk, manage your risk, and be very careful on those. And yeah, Shane, nothing's 100%. As I always say to you guys, 50-50 on every single occasion, 50-50. But I do like your call. If you can call it, it does work. I know it goes up and then it settles back, and it always settles back. As I tell you guys, let's say 8 times out of 10, it settles back to where it started. So if it does push out on a news event, there's a really good chance it will settle back to where it started. So you probably odds on to make money on that. But there are those cases, like I say, where it keeps on going. That can get tricky. So just watch your risk. That's exactly it, Shane. Big, strong candles with low volume is a fake out. Volume determines if it's a good run or if it's a fake run. And if the volume goes with it, then it's a strong run. And if the volume doesn't go with it, then run, don't trade, run. But that's if you're trading with volume, yeah. And you have to know how to trade, and that's important. Time restrictive algos do better. Okay, yeah. I don't like to trust an algo with my trading. I don't know, a lot of people do, but I prefer not to. I prefer not to trust an algo with my trading. I prefer to do it myself as much as I possibly can. I trust myself. I trust an algo. But yeah, those there are some people that will put an algo in and feel that it'll do the job one way or another. I suppose it takes emotion out of trading. Does take the emotion out of the trading. Unless, of course, you come back to your algo and it's ripped all your money out your account, then in that case, the emotion will start to play in because you'll be upset because all your money's gone. And who are you going to blame? The algo? No, you created the algo, so you can't blame the algo. Yeah, all those people that are watching your stop loss, maybe them, I don't know. All those people that are watching you trading, no, I don't know. No, you can only blame yourself. Yeah, it's you. 12 ads. I love this channel. 12 ads. That's insane. That's a lot of ads, man. Excellent. Excellent. How many ads? But look, it is a 2-hour video. Okay. So we've been here for 2 hours. That's a long time if you think about it. So I can guess that there would have been a lot of ads on the videos. One thing I do know is that's how YouTube makes its revenue. So that and or premium. So at least YouTube, when they do their ads, if you take premium, they don't give you ads, which is unlike some other channels that I watch, which I pay premium and I still get ads. I mean that's insane. At least on YouTube, if you pay premium, you don't get ads. At least that's fair. But yeah, I've seen some nasty ones. All right, guys, I think it's time I be on my way. It has been 2 hours now that I look at it. It's been a couple of hours, and this video could go on all day, I suppose. We'll just stay here all day talking and carry on. But yeah, let's end it here, and let's carry on Thursday. Thursday, we'll have another great get-together. We'll talk a little bit more, and we'll have a little bit more fun. It's been good. It's been great having you guys here again. We've had an exciting session, I think. And I think we've covered quite a lot today, hopefully. And I hope it's helping you guys. I just saw a comment and he said he's only had one ad. Shane, I'm sure all the ads are going to you. It might be location. It might have something to do with the location of being in a certain country, but I love it. Guys, thanks for being here. It's been good having you. Love you to bits, and I'll see you guys soon. We'll see you on Thursday again. And don't forget to like the show. And I believe in some countries they even get a hype now. We don't get that in South Africa, unfortunately. But okay, all good. Keep your feet on the ground. Reach for the sky. And I'll chat to you guys soon.